on, guys? It's K-Dub here with another episode of Crypto Zombie. So it's Friday, it's the weekend, we made it, congratulations, welcome back to the channel. Hope you had a great day yesterday. It is the weekend and Bitcoin is up 1.5%. Okay, we will take it, but wait a minute, isn't today Black Friday? I thought prices were supposed to get lower on Black Friday. Well, I mean, I guess if you consider where the price of Bitcoin was back in June, well, then yes, this is quite a discount. But having a look what is going on, the one thing that does make me a little bit happy, I'll be honest, is the fact that we've been putting in, look, a higher low and another higher low, and we did put in a higher high. And currently, you know, if this holds, this would be another higher high, right? We do have some resistance overhead though, so stick around. I'm going to get into that as well. Also, don't freak out about how long this video is, guys. I do have a bit of a surprise coming up a little bit soon, and maybe by the intro you've already guessed it, but having a look at some of these gainers today, we have Digix DAO up 48%, Luna 10, Sia Coin, Cosmos, Matic, Dash, Mindle number 26. What is that all about? Bytum and Electronium. And also, I just wanted to point out that Bitcoin dominance is back up to 66.7%. This is the highest we've seen Bitcoin dominance on CoinMarketCap in, I don't know, I think it's like probably 2 or 3 weeks. So that should say something. But yeah, guys, as far as Mindle is concerned, I don't know much about this, but the top exchanges are CoinTiger and CoinAll. So be careful with that one. If you know more about that, drop it in the comments and let me know, because I would like to know. But that being said, even though we did have that nice little bounce, right now the longs and the shorts are split down the middle, which means bulls versus bears. Not really too sure what's going on, right? Slight buy above me, neutral to buy, you will see that. If we have a look over here, Backed is actually already up to 2,610 contracts, but I know what you're saying, Backed is the devil. They're manipulating the markets, they're shorting Bitcoin to zero. Well, actually, that's what we're gonna talk about today. I wanna discuss that because it's a hot topic that a lot of people have been talking about, and we are gonna get into that. But having a look right here, I just wanna point out short-term, some resistance, and then we'll talk about some other stuff. But you can see right here, essentially now, some people say, oh, it was like the president of China, he pumped the price. Very well could have been, but you have to admit what an interesting coincidence that it happened right when Bitcoin actually touched this 200 daily moving average on the CME futures. We had that massive pump and we did fall below it. So I do think that this is going to provide a bit of a resistance, you know, getting up to that level, and that's around the $8,060 level. But you know what? Why should I have all the fun? Let's have our good old buddy Eric Crown tell you himself. That's right. You probably guessed it from the intro. So Crown is here today to go over his short-term to long-term analysis, also end of the year price prediction, and we're going to ask the hard questions about manipulation, futures, derivatives, risk management. It's all in this video. You're definitely going to want to check it out. If you're not interested in the TA, links below, you can skip ahead to the discussion. Hope you guys enjoy the video. All right, so Eric Crown, welcome back to the channel. It has been far overdue since we had you back. How you been, man? You moved again, by the way. You're no longer in the US.
Yeah, back in Helsinki, Finland. It's beautiful to be back here, man. Your channel's like doubled since I came here last. It's so great to see you have success, man. Like seriously, I think you deserve it so much. And hey, man, it's cool to be with this community and meet all the new people from here.
Absolutely. And for everybody, if this is your first time, I know a lot of new subscribers out there, definitely check out Crown's channel. He's awesome. He does live trade, or he does trades. He does analysis every single day. I've learned so much from the guy. So definitely we're going to hop in. But I think most importantly, why everyone is here today is essentially just to sort of ask what the heck is going on, man. So I was hoping that first maybe we could just hop in, have a look at the charts. But then after that, I got a lot of questions I want to ask you as a professional trader in the space. You know, so many people saying, I've heard people say, you know, TA doesn't work for Bitcoin. You know, essentially derivatives and futures have destroyed the markets. You know, risk management is a non-existent thing. I mean, I just want to talk about all of this with a professional seasoned trader, if that sounds good to you, man.
Yeah, absolutely. All right. So I'll start sharing screen here. We can talk a little bit about the markets. Let me know when you're seeing my screen.
Yeah, we can see it.
Okay,
nice and clear.
Yeah, so Bitcoin having a nice little reversal short term. I do believe that, well, it would have sounded a lot better if I was on here a couple of days ago and I was saying that we're likely to go higher. But I do think that we have some more upside here in the short to medium term. Bitcoin looking like it's going to make a quick leg to 7,900-ish region, probably have a small pullback there. And then I don't, you know, think things are looking relatively okay here on the daily. The problem is that the higher time frames are still very much down, unfortunately. And again, this is coming from, and if you are kind of new to me, I do believe in Bitcoin. I do like Bitcoin, but I have to call a spade as a trader first and foremost. And looking at this right here, we could easily make our way up into the lower 8,000s from this region. But the problem is that on the higher time frames, like weekly and above, and we are going to be closing the monthly relatively soon, we are still in a downtrend, and we won't be changing around the trend until we get back above this hump right here, about 95, 9,600. Doesn't mean that we can't change around the trend first and foremost, and doesn't mean that we can't have some more upside in the interim. But just always, at the end of the day, the most simple trading strategy has honestly made me the most money, and that is trading the dominant trend. And on the weekly right here, did we just set another lower low? Yes, we did. Could we pop back up and set in a higher high? Yes, but a lot of work needs to be done still, almost $2,000 up from here on a weekly closing basis. But things are looking good in the short term. So I do want to focus on the monthly, as it will be closing tomorrow, I believe it is. It's the 29th day of November now. And looking at this right here, this would be the biggest thing that I'd focus on for the kind of macro on Bitcoin right now. Assuming that Bitcoin can close above this red moving average right here, that's the 10 simple. If we can close above that guy right there, I actually would be willing, it's like, sounds so pompous when you say willing, but I would be looking at this as a potential reversal in the making. Now, if we do close below the 10 simple, I would actually be quite bearish coming into the new year, but probably have a range for the month of December, maybe even January, between 7 and 8. But for right now, Bitcoin's actually above it, although with the data go till closure, anything can happen, of course. So I'd still kind of wait for confirmation on that. But as it is right now, we are above, and we will be seeing CMEs close later tonight, which likely do dictate the pace, as if they close above, we're very likely to see spot price action close above as well. So with that said, I just want to mark off some very critical levels, not do anything too crazy on the charts right here. But as far as things go, our next major resistance, if I put back on these horizontals right here, oops, let me actually just get rid of all this. And for full disclosure, I am long right now. I do want to be very open and honest with my own positions, but I am long from a little bit under 7,500. I actually did just post that trade on YouTube.
Yeah, I saw it actually. Yeah, nice.
Yeah, and looking at this right here, this is kind of our next sort of liquid zone that we're brushing up against. That's the daily 21 and the daily 377 exponential moving average in this region, which typically very, very important for long-term trend. And while we are kind of brushing up against it right now, I do think that we probably officially test it at around 7,900. Likely do play out a small term pullback from there. And then the next big thing for Bitcoin, and actually do think that it's looking more and more like that. It does want to take out these guys to the upside, maybe in the middle of the month of December or something like that. I'm not very good with time analysis. Not that you really have to be as a trader, just you just have to know levels. But if we can't get above this level, then I would be looking for a rally into the lower 8,000s, about 8,300 is kind of where I'd be aiming my cannon towards. And that's where things start to get a little bit more interesting, as that is where the daily death cross is coming in around. We do have the green 55 and the purple 200 exponential moving average right here, which if Bitcoin can get back above those two guys, that would be significant for myself. At least for the daily time frame. But remember, weekly's not changing around anytime soon. But if we're just going level by level, which I think is probably the best way to go about Bitcoin right now, or at least I think it's just the most easy way to go about Bitcoin right now, and there's nothing wrong with that. If we do clear this level, I would be looking for a move up here. If we do clear this level, I'd be looking for a move up to 87, maybe even 9,000, and then
what is your overall thoughts of the macro trend? Because if you just zoom out, it really does just look like a continuation of a gigantic downwards trend. And
yeah, so we do have big problems with this, and now I'm going to kind of titrate down everything that I just said. So while I am talking a little bit more optimistically in the lower time frames, make no mistake about it, the trend is very much down, and I'll actually go a little bit more deep into this, and then I'll move on, I'll promise. But looking at this right here, a lot of things staring me in the face that I don't like. First and foremost, we do see across of the yellow, whoops, let me get these back on. We do see across the yellow 21 exponential moving average and the red 10 simple. I'm going to take everything off except for those two guys and put them on right. Actually, we need those guys. There we go. And every time that we've gotten this cross, we have had at the very least about a 70% pullback. Last iteration that we had was back on over here. It didn't get the timing right, but it did get the momentum right. So from next high to next low, about 67.5% down. The time before that we had this bearish cross was back on over here during the bull trap of 2014. Another 74% down from from signal to next low. And then another example right here where you get the cross. Of course, this one a little bit different, but we can take this a step further because that's not perfect, of course, as you can see. What is even more important to me is the slopes of these guys. Remember, they're moving averages. They're telling you about the well, it sounds like I'm being condescending, but they're telling you about the average of price action. And so when they both have downward slopes, we can notice that they actually do produce that same sort of movement. In fact, we get more iterations with that, which is better from a TA perspective. So yes, they both do have negative slopes as of the break from about 10.3. That's where I started to get bearish. The last time that we had them both get negative slopes was at the high of, this sort of a bull trap right here. Again, another, if we take it from high to next low, about 77% down. And then only a few other times we've actually had this happen. Again, 2014 right here on this bull trap to 75% down. This guy right here from last high to next low was 64% down. And then this guy right here as well from last high to next low was 76% down as well. So keep those numbers in your mind because we're going to do a deep dive here for a sec. And
just for everyone that's watching, I want to clarify too, like you have seen certain moving averages do death crosses, but you sometimes have one that may be sloping upwards and you don't necessarily have to take that. But when they're both sloping downwards, you should take it a lot more seriously.
Yeah. And we're going to go into that right now, actually. So going over here to the daily, this one's a little bit more damning to me because we just have a lot of past history on this one, but we're going to pull up the 200 simple, which is the white one, and the 200 exponential moving average, which is the purple one right here. And just intuitively thinking, knowing that the exponential moving average is a more reactive moving average, whenever it's above the 200 simple, we're kind of like generally bullish on a daily because, they're very high periods. Whenever it's below, we're generally bearish. Then on top of that, the slope, as you just said, kind of like further confirms just death and destruction, when you get those crosses. So we did see them cross right on over here. Bitcoin did have the China rally, right?
Yeah, I want to ask you about that though, but I'll let you finish. But I want to go back to that China rally. Got a lot of questions about that one.
And then we had, and now we're actually seeing the 200 simple start to lose its positive curvature and start to actually slope down. And the longer that we stay below essentially 9,400, it will get that negative slope in the next week or so. And the 200 exponential moving average obviously already there. Now, of course, this works both ways. The last iteration that we had to the upside was right here. They both get positive slopes right here, and then boom, massive move. And then, of course, to the downside right on over here, gets negative slopes in this area right here, and then that drives us all the way through 2018. And same thing for the positive slope on this guy right here. And negative slope right here, you can already see it, of course. So I won't bore you with the details of that, but just kind of painting the picture here for the long term, just basically saying that, hey, as long as we're below 9,500, it's still a downtrend on a weekly, and that is an issue for Bitcoin. Every time that we've had a downtrend on a weekly, it's been at the very least, 70% pullbacks or more, just from that high to next low, going right here. And then, of course, again, same sort of areas essentially. And we do have a downtrend right here, and they typically do play out for quite some time. Now, not only that, but we want to take it just one step further and go on over here to a fresh chart and put on a fib. Whoops, I guess that's not my chart with fib. Maybe it's this one right here. Nope. All right, none of them have fibs, huh? Maybe it's the BLX index. Yeah, there we go. We do see the 786 Fibonacci retracement down around that 4,200-ish region right here. Keep that one in mind. So, because we're going to paint the whole picture in just a second, but we need to lay out all the things.
Do you think we would actually fall below the 200 weekly? I mean, that thing's been like the holy grail of support for Bitcoin.
Yeah, I mean, there's no rule that says it can't, man. It's a very strong support. It's kind of like your traditional, major money mover kind of area of saying, hey, I'm going to be generally bullish, generally bearish over the long term. But, we could come down to it and it would kind of be in that range anyways. It's still in the 4,000s. Anywhere here kind of does make sense, essentially, as long as Bitcoin maintains this weekly downtrend. Looking at the volume profile, we do see the point of control. Well, actually, the point of control, if we do zoom in a little bit, right around that same level in the lower 4,000s, essentially, which we have significant activity printed in this region, much more than what we even did at 6,000 level, and even more so than the 8,000 level. So now we're going to put all the pieces together. And again, Bitcoin, I'm long Bitcoin right now. I actually do think that Bitcoin has more upside from here right now, but oh, wait, I also forgot to mention this. We do have Mr. Peter Schiff, the lovely Peter Schiff pointed out the head and shoulders on the weekly. I do agree it is a head and shoulders. However, the target I would disagree with. He's saying that it's a target of 1,000. I would say the target is actually down here, right around about 4,400. So now we're starting to sort of overlay things in there. And that is viable. That as a target is viable as long as we are closing weeklies below the neckline, which is currently about 7,900. So we'll have a chance to negate this. And if we do close a weekly above, it will be negated. So fair enough. But for now, it's still very much valid. And going just one step further and going over here to what I've been looking at as the Bitcoin VWAP ratio, actually, before we do that, let's just kind of measure them all down. So remember, all of those signals that we've looked at before have produced about 70% down from last high to next low. If we were to just shave 70% off price action right here, where that put us in around, well, about 4,300, 4,400, right down in that zone. Let's take it one step further and look at the Bitcoin VWAP ratio over here. This is something I've been keeping an intentful eye on for the last, for a while now, but especially the last couple of weeks where it became, very, very concerning. And then we'll look at one fundamental thing after this, and then I'll be done. I promise. But looking at this right here and kind of zooming in on this, making sure that you can see this, you do see that there are multiple moving parts. So I'll quickly explain it and then get into why it's important. But basically, where my cursor currently is right now, just kind of like I like a trend line between there. And that's basically the regression line where when we're generally above on all these VWAP ratios, or sorry, on all these moving averages on the VWAP, we're generally bullish. When they're all below, we're generally bearish. And then the posturing of the blue versus purple versus pink speaks to the strength of trend. And then the divergences between those speaks to the length of trend. So for example, this is your bull market right here. Your blue is your most reactive. Your purple is your like middle one, like some sort of is it Goldilocks with the three bears or something?
Yeah. Yeah.
Oh yeah. Okay. It is. And then you got the pink down here, right? So this is your strong bull market. That was 2016 to 2018. Beautiful. And then same thing and then vice versa for the downside back on over here in 2014, very, very nasty year-long downtrend. And we get the full on splayed effect. Well, as you can see, we do officially have all three of these guys below that regression, and we are seeing the blue really start to make way down below, not just the pink now, but if it does get below the purple, that's when things typically do take, 6 months to a year to really play out. And even just having the purple below the pink, below that regression line, has actually produced, well, we'll just go over the iterations. The last time that we had an example was right here. That was from 8,400 high to 3,000 low, essentially. The time before that was right here from 20,000 high to 6,000 low. We can measure those out. I can already tell you that they're 70% downs. The time before that was this bull trap right here in 2014. Boom, down. We already looked at it, 70% down. The time before that was the parabolic high right here. We already looked at that one, another 70% down. And then the time before that was this guy right here, another 70% down as well. And the time before that was actually a little bit of an outlier back on over here. Very, very nasty one, kind of at the genesis of Bitcoin. But that was about 94%.
The very beginning is difficult because the chart is just so erratic. Like it just doesn't, you can't even really go by that.
Right. But, and as time goes on, the past history of Bitcoin is going to be less and less relevant.
Bitcoin totally at 7,800 right now.
Yeah, it's not bad, man.
Nice.
Again, like
awesome.
we could actually do some major damage to all the things that I'm saying right now. But as long as we're below these critical points, I do have to look at it, as potential. And looking at this right here, again, measuring all those ones out, that was this guy right here to next down, 62%. We looked at this guy right here, 69%. We'll go through a couple more. This guy right here, the bull trap that we looked at was 76%. And this guy right here, another 72%. This guy right here was another one at 75%. And then this guy over here, we can't really get, but again, a little bit of an outlier. So all within that same region. And then let's take it one step further and look at a fundamental indicator, which I'm pretty sure a few people have been bringing this up recently. I was bringing it up a couple weeks ago, and I haven't really been talking about it since because we actually got the signal on it. And well, let's just look at it. So this is the hash ribbons down here. And I'm not really like a fundamental guy myself, but looking at the past history of this, well, this is the same signal that we got before before October to December, my friends. 6,000 to 3,000 essentially, where we get major divergence as we see the hash kind of invert here. And again, I'm probably explaining this terribly, and someone who's more fundamental.
No. We've actually, believe it or not, we've gone over minor capitulation on the channel. So this is actually just a really nice way to look at it. So most people watching should have an idea of what we're looking at.
Okay, excellent. Yeah. So last time we saw a signal like this was October, and that was basically from 6,000 to 3,000, which was about a 52% drop from signal given to next low. Let's do the same thing for here. What happens if we shave 50% off from that signal? We were right around about 8,500. You can already do the math in your head.
Yeah,
I'd put us down around 4,300. So I do think it's very much possible. I would say that this would go out the wayside if we do close the monthly above that critical level that I spoke about earlier, 7,750. And especially if we get above 9,500, that I would be bullish at that point. I'd be bullish.
So 9,500 close out if that's like bullish for you. That would be
that's macro bullish to me because once again we have higher highs on a weekly, and that's that changes the trend. But until that happens, I am very cautious here. I'm not going to be holding longs, even though I am long right now, and I do think that we have continuation. But hey, man, there are a lot of concerning things with what's going on in the overall general sphere of this asset. Not only that, but if there's one more thing, I forget was there one more thing that I wanted to mention? Maybe not. No, I think that's fine for now. Actually, what I can say is, okay, let's actually wrap it up like this. So I've just talked a lot of doom and gloom. As a trader, I don't trade like that. As an analyst who can make all sorts of crazy calls but not trade for it, it makes no real sense. But as a trader, the way that I look at it is, hey, what we have right now on a daily is a nice local low. We got some upside here. That's fine. Until we actually break this low, by closing a daily below, let's call it 69. Great number as well. If we can close below this baby right here, then yes, I will be looking for the next leg down, but not even to that 4,400 level. I would be looking for the next leg down to about 5,600 right here. That'll be the next potential reversal-ish point I'd be looking for. And below there, then yes, then I'd be looking for 4,400. But until that happens, I'm happy to treat this as a low time frame reversal, and that's all well and good, and potential to change around the higher time frames. So take it year by year, and that's where you don't really have to be reliant as like a trader's not reliant as being like an analyst, having the clout for it, right? Mm-hmm. So that's why I cover all these scenarios and then kind of talk about the triggering points. And then, at the end of the day, man, the trades just reveal themselves over time. So it's pretty damn.
I wanted to ask you a quick question, your opinion on it, because obviously, if you look at the CME futures chart versus the spot chart, clearly there's a very different look to it because we're literally we're excluding weekends, right? And something that really blew my mind, and I just want to ask you, because during that president, of China pump, right? Blockchain, everybody got confused. We've had 43%, right? If you actually look at that lined up perfectly with the 200 daily on the CMEs. Now, is that just like, you look at a chart long enough, you find things that sort of fit? I mean, because, let me basically, the question I'm trying to say is, I don't know, did you watch the Richard Hart and Tone Vase? Did you get to see that little debate thing yet or no?
Yeah. Do you want to talk about that now?
Well, I want to talk about what Richard Hart was saying. He was actually saying, you have technical analysis, fundamental analysis, but now you have a third one called the China analysis. That's what he says, right? Mm-hmm. And so, obviously China speaks, it pumps. He says, when Trump came out and had nasty words to say, basically nothing happened to the price, but the Chinese president speaks and oh my goodness, right? But also, how convenient was it that it lined up perfectly with that moving average? So what do you actually think? How much of that was actually a response versus how much was just a technical setup?
It's never one or the other. It's never black or white, right? But what will happen in a situation like this when we come down to CMEs, and I think that the CME chart is actually the most important chart in Bitcoin land. It just gets things the best. And if I were to call a potential top on this next rally, it's probably around one of these areas right here. If we do top there, if we do have downside continuation. But yeah, man, it's like, what comes first, chicken or the egg? Well, first things first, news is very, 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 very subjective. When you and I hear the news, we might both we will hear the same
Crown,
words.
are we gonna not talk about charts? We could just switch back to standard view. That way so people can see us because we're so small on the screen right now. Yeah, much better.
Okay, cool.
All right.
Yeah, man. So when it comes down to it, news is subjective. You and I can hear the same piece of news, and we can both come to completely different conclusions. For one, second, we don't even know if the news is what is like true, especially in the case of China, because it has to get translated. So there's like some sort of error degree or degree of error with that. And then on top of that, we don't even know how to interpret the news anyways. Like, I might hear that news and I might say, okay, well, China's like one of the most authoritarian, totalitarian governments in the world. I don't know if them getting into Bitcoin or endorsing Bitcoin is a good thing. Whereas someone else hears and they're like, China getting into Bitcoin, this is amazing. Go all in.
Well, isn't the joke like if China bans it, like invest in it, right? Because like basically everything they've ever banned has done phenomenal, man. Like in the stocks.
It's more of a game. So here's the way that I've learned it, and this is coming from my background as a professional market maker, authorized trader on the floor of New York Stock Exchange, ARCA. The way that news operates in the traditional land is essentially it provides a reason for retailers to feel justified in the move, essentially. So what big money movers will do, and remember, the only reason why price action moves ever is not because of news, is not because of, President Xi Jinping or whatever it is, or President Trump or whoever it is. Again, not a political statement, just it doesn't matter. The only reason why price action ever moves is because of an imbalance between buyers and sellers. And the people who create that imbalance are the people who move the markets. And who are the people who move the markets? People with the most money. It's not like people always talk about manipulation, whatnot.
I think people want an answer. That's what it is. They want to be able to blame someone or why did this happen? But you notice though, it's like when it goes up, it's adoption. When it's dumping, it's manipulation. Like why you change your, like, I don't know, even with like the derivatives, right? The futures. I want to have that's a big topic I'd love to talk about. And, when the price was going up, nobody complained about longing. Everybody was having a great, as soon as the price started to go, suddenly these futures, they're destroying the markets.
That's,
I mean, and they did come out. There was that statement that did say that they were looking to tame the beast, essentially. And that's what they were.
I don't think they've tamed anything, man. We went from 20,000 to 3,000 to 3,000 to 14,000. This thing's been very untamed as a trader, man. This is insanity. Is what it is.
Then there's also, those scam Ponzi coin tokens that are in China. What are they? Plus coin, one coin, whatever the hell. They're saying that those guys were just, people were just buying, because don't forget, back when Ethereum was pumping crazy, the demand for Ethereum really came with ETH was because of the ICOs. So people were only holding on to the ETH just long enough to buy it and then send it to the ICO. So they didn't care what price they bought it at. So people were buying Ethereum at any price because they only had to hold it for maybe an hour or so.
Right.
And that was what was driving it. So some people are speculating that all of this pump was fake because essentially it was just, I'm buying Bitcoin for this Ponzi. And then once the Ponzi, exploded, everybody dumped. And they're, once again, trying to pinpoint the exact reason for the past year.
I mean, you can't ever know what the reason is why someone bought it or sold it, and to even try to understand in a literally a world market is honestly, as a trader, it's a distraction. As an analyst, that's a good thing to mentally masturbate about. But as a trader, there's no real advantage to understanding that because you can't truly understand what everyone's motivations are. I mean, there's always a degree of error within that, as we spoke about before. So, when it comes down to that CME thing that we just spoke about with them bouncing off the 200 simple, that's a technical pivot, where you're usually going to get buyers at. What happened there was likely the big market movers heard the China news and they said, okay, what we can do now is we can pump this baby up and all of the retailers are going to think that this is like the big turnaround. And if you look at the charts, man, the weekly got literally stopped right before making a higher high right there. That's textbook. It's damn textbook. And you see the same, and I saw the same thing in traditional markets all the time, man, all the time. And the news is there to make the retailers just justified in that move so that when it does go against them, it's no longer like, they don't have to take responsibility for it. They can say, oh, it was XYZ did this. And man, if he wouldn't have done that, I would have been right. It's like, actually, no.
Well, you are, for example, like a big thing I've been seeing lately is, there's been a lot of, people speaking up about the fact that derivatives, futures, they've destroyed it, right? And I'm not even just talking about just backed or CME. I'm even hearing like BitMEX and Bybit and, I don't know, Deribit's more options, right? You do that as well. But essentially, I mean, what is your take on this? Because I mean, personally, let me just actually give you a little backstory really quick. Okay. This is the thing. When I first got into crypto, I actually used to be like, screw Bitcoin. Who cares about this old dinosaur? Right? And I was altcoins, right? And that's all we were trading. Well, they lost 99%, most of them. I think some of them bounced back maybe 20% since the low. But for the most part, every single chart is lower high, lower low, and flatline. Essentially, for the most part, right? So what happened was people got tired, okay? They said, well, obviously altcoins aren't working, right? Price is down. What was everybody looking at? Well, if Bitcoin doesn't survive, we're screwed, right? So everybody started getting into more Bitcoin TA. We started doing more analysis, right? And then the question came, well, now that Bitcoin is starting to go up in value, I still have a day job. I work 9 to 5. I can only put in so much per week. So how can I accumulate more Bitcoin without having to deal with these shit coins, because I don't want to lose another 90% of my value. So a lot of the market turned to these products like BitMEX, Bybit, whatever it is. Okay. Like I said, nobody complained when price went up. Everybody's pissed now that price is down, and that's the reason. Now, I just want your opinion on that. What do you think?
Yeah. So, okay. So, man, there's a lot of ways to take this. Okay. First and foremost, CME and back to manipulate the markets is so asinine of a statement, and anyone can verify themselves who has access to the internet. So first off, you probably, if you're on crypto Twitter, you've probably seen the backed volume bot, right? And they posted on the low, on the low of this dump thus far, which was the 24th of November. Backed did, I believe, $20 million in volume on that day. To put that in perspective, BitMEX code did over 4 billion in 4 hours on that day. 4 hours, 4 billion versus 20 million in a whole day. And on the whole day, I think BitMEX did like 6 billion or something like that. Pretty damn impressive, right? And 20, if BitMEX or any exchange did 20 million, like it would just be like, what is going on today? Nothing's going on. So backed is pretty much irrelevant. CMEs are getting up there. They do about 300 million on a good day, but that's still nowhere in the billions, of course. And more importantly than anything, people make this very one-sided argument that sounds right, and it makes really good video titles, and people love to hear about manipulation, and it goes something like this. Because CME futures are cash settled, people can just blindly short, and that's how you can bring Bitcoin down. Well, first things first, the CME futures are not just marked off anything. They're marked off of Bitcoin index price, which I believe is Gemini's price. So you're being marked off the price of Bitcoin at expiration anyways. So that means that the price of Bitcoin is always going to be related to the asset. And when we're talking about CMEs, we're typically talking about professionals, because you have to have, you are fully collateralized for every contract that you take, and every contract is a minimum 5 Bitcoin. One contract equals 5 Bitcoin. So people who are trading on CMEs, you have to have hundreds of thousands in your account, probably millions, in order to just make a few trades here and there. Yeah. So those are professionals. And what are professionals doing? What are professionals using futures for? Well, they're using futures for likely what they were intended for, or hedging. So
I mean, Crown, I would consider you to be these guys that they talk about. You're one of them. You know what I'm saying? And so are you just like, I'm gonna short this thing to the ground? Like, is that your like intention? Like, what, like, do you really genuinely think it's like mob mentality? Like, it's always they, them, the
institution, a romantic story,
it's like.
Yeah, it's always they, but who are they? It's they, they have no name. And I guess I've worked with they before, and I can tell you they're just people like you and I, and they're just trying to.
And now the other thing too, and this is because I do care about the community, and there's a lot of new people in the space. They're not professional traders, clearly most of them even just finding out about Bitcoin or just looking at a video a couple weeks ago, they're new. So what do you have to basically say to these guys? I mean, because yes, there are these products out there, and they're not doing KYC, right? So anybody can sign up, you can deposit your Bitcoin, and go to the whatever. What do you think about that as far as risk management is concerned? That's one thing. And the second thing is, do you honestly believe that, these guys are betting against their own clients? Because even, for example, Bybit, which is a much smaller exchange, the price that they look at, there's always 2 prices on it. There's the actual price, and then there's the price in pink, which is actually taken from other exchanges like Coinbase. So, even if
that's their index, that's where you're getting
the actual the price on, for example, Bybit or whatever, or actually I'm specifically talking about that, was to fall below, technically you wouldn't get liquidated, because it's actually based on what the other exchanges are doing. You see what I'm trying to say? Like, they go by that price. So I mean, like, it's just like feeding into the whole manipulation thing again.
Right. So, what I'd say to people who are kind of like doing this place, don't trade. And don't trade. Like, here's the thing with trading nowadays. We live in the age of the internet. So you can go on a testnet exchange, and if you want to practice trading without risking anything, do that. I did that for like 6 months before I ever touched a real account. And when I started with
all of these guys, by the way, if you are on these exchanges, not to cut you off, Crown, everyone out there, they do have test platforms. You can try it out, and I do recommend that.
Yeah, absolutely. And, and of course, there's a difference between having some skin in the game and, just making trades on a testnet account, but it gives you an idea of what to expect, right? And you'll be able to test out your strategies, if they're going to work, if they're not going to work. And then, of course, there's an air of degree in that as well. But after, if you do feel comfortable, and if you do feel like it's for you, don't put all your money at stake at first. I mean, this is insanity, man. When I first started, man, I traded so low, it was pathetic. It was so pathetic, man. And man, I had my ups and downs too. Of course, man. I've done like when I first started, man, I had a huge blowout, man. It was also one of the best learning experiences of my life. But man, at the time, it was devastating. So I can definitely relate to people who have gone through that. But there's a great saying. Like a smart man learns from his own mistakes, a wise man learns from the mistakes of others. I was not that wise man, and I had to learn from my own mistakes. But you don't.
Yeah, no matter how many times people tell you, you got to try. I think everyone has just like, once like slid it to 100x just to see what would happen. You know what I mean?
Right.
And then, another thing is you are huge about risk management on your channel. That's like one of the biggest things you speak about. Right. But then, you go on and read the disclaimers, and it's like, 72% of traders lose. And,
I'd love to respond to that comment though. There's that statistic that says something like 90% of traders lose 90% of their account within like 9 months or something like that. Listen, man, this is a competition, and 90% of people in life fail at what they're trying to do because they don't try hard enough, and they probably quit before they get to where.
And they like to blame other people for their.
And I mean, it's a huge thing. Like I don't want to make trading sound like it's easy. It's not, man.
No, it's
not fucking easy at all.
Guys, look, full transparency, Crown. When I first started trading on leverage, I had terrible trades in the beginning because I didn't really know where I should look for setups. And then recently, a lot of people know on the channel, we've kind of just started, buying the bounces. You know where the support is. It's touched it 3, 4, 5, 6 times. You put your order in there, you get your bounce. Right. You don't get greedy. You get out, and that's it. It's just a quick one. You know what I mean? And but the greed. You want to go higher. You want to go more. You want more money.
It
faster.
Always feels like that.
But the problem is
trading, just like learning a high level at any skill, it teaches you about yourself, man. You have to fight your own inner demons, because you're going to notice those internal battles where you're like, man, I should up the leverage. I should up the contracts. This position's going for me, and I'm just going to go full on into it even more. And then, it comes back to your entry, and then it goes below your entry, and they're like,
right. And that's the thing too, is like people, yes, we do look at charts every day, but that doesn't mean you should be trading every day. There are actually times where you probably should not be trading. And, just to say, I had some people ask me, oh, K-Dub, why didn't you do the Bybit competition? You'd probably do really well. You have a lot of people that watch your channel. And honestly, the reason I didn't do it was because I didn't feel comfortable encouraging people to trade all day. I didn't know what the circumstances were going to be like. Nobody knows what the markets are going to do. And it's like, why should you encourage people to, trade as fast as they can and spend, it's like.
I'd love to speak to that for a second, man. So I was approached by Bybit as well. And listen, I have nothing bad to say about the community people at Bybit. They've been very, very nice. But as far as an exchange goes, there's a reason why I didn't enter that competition as well. It's basically the same thing. So during just like a day-to-day trading sphere, you don't know if there's going to be an opportunity or not. Sometimes there's not. Sometimes you go a month or two without an opportunity. If it doesn't meet what you're looking for, I don't enter. And that was one of the biggest lessons that I learned with my own, with my own failures in this game, is that if it doesn't meet exactly what I'm looking for, I do not chase it. And that, that has kept me safe up until now. Who knows, there might be another major blowout that I'll have to learn another lesson. But with a trading competition like that, first and foremost, I just can't imagine like a professional exchange offering like some sort of a video game to trade off of. It's just like trading addiction, man. It's promoting the wrong things. And for me, I don't want to be involved in something like that. And more importantly, it's just the wrong mentality to go with.
I mean, dude, dollar cost averaging is number one. And if you are going to trade, you don't need to trade every minute of every day.
It seems to me to be encouraging as much trading as possible in a small amount of time on their exchange, so that you can generate the most fees for them. I can't support that, man.
Yeah. Well, that's basically why I didn't give or take why I didn't do it. Like, mostly just because I just don't think that people should be freaking out and trading like when they don't feel comfortable trading. Most people shouldn't
be trading at all, man.
I agree with you. And I think actually, between me and you, I do think that that's something I'd like to focus a little more on my channel. Because, as these new people do come into the space, I do think that as, guys that have YouTube channels, we do have somewhat of a responsibility to the viewers to actually explain to them like, hey, this may not be the best choice for you, Right. But the reality is, I have people that watch my channel that have been around since pre-2017. Yeah. So, in one hand, you need to have content.
K-Dub, I totally understand. I totally understand, because it's an internal battles. Like, I'm not here and you're not here to be someone's like dad and tell them, hey, you better not trade, or hey, you better trade. I just want to voice my experience saying, hey, can you learn how to do this? Yeah, absolutely. Anyone can learn how to do it. Is it going to be hard as fuck? Oh yeah, it is. And I can tell you that there's a lot of trials and tribulations, especially that I faced. Maybe you might face them, maybe you might not. But anyone who's making this sound like it's an easy endeavor is trying to sell you something, man. And it's not. It's a very, very long-term game, as with any skill. Do you think like Michael Jordan learned how to play these are terrible comparisons. I know
what you're saying. Time. Right? Yeah, exactly.
Like anyone who's doing anything at a high level, which trading will be, they try for a very long time over their life with mentors, with coaches, and they're always getting new experiences. And, and that's just the crux of the game right there. I mean, it's just like anything else. So, I always want to make that very clear. Like, if you are thinking about trading, that's great, man. I absolutely love trading. It's, I mean, this is my life, really. Mm-hmm. And, it's led me to some major, to some major successes, also some major downfalls as well. But hey, man, at least in my experience, it was very, very difficult to get to this level. Very, very difficult. It can be done. And I don't want to dissuade anyone who's interested in doing it. I would have hated for someone to do that to me when I was younger and made me like quit, when I wasn't so mentally strong. But at the same time, I want to be realistic. Hey, if you are going to get in this game, make sure you make sure make sure you're not putting any money at risk at first.
I know, but like, you know,
Start.
and the other thing too, I just want to point out is like,
Yeah.
there are people that are just inherently gamblers, and
there's
they will
gambling
gamble.
addiction, man.
And I don't think that you could put as many disclaimers you want in front of your video. You could shout at them from the rooftop. And if that's their mentality, they're just going to do it. You know what I mean?
It's the FOMO crowd, man. And, you know, and I don't want to disclude myself from that. When I first started trading, I was that FOMOer, man. And that's
me too.
I
would buy into the pump.
Yeah, 100%.
Not knowing where it would end. I'd be like, well, I'm just going to jump in and hope for the best, you know?
And man, it was great because I had a guy on my channel this last week and we did kind of like a podcast out, and he spoke to me about something that he defined as trading addiction. And it's like, man, that makes so much sense. You know, if you're just trading on a day-to-day basis, which I feel like that competition is kind of, trying to encourage,
man.
there's not always a trade to be made, man. And like I said, sometimes I've gone months without making a trade. Sometimes it's better to just take some time off, you know? There's always the next trade as well. There's an abundance of opportunities. So I never see any reason to rush myself. And especially as a trader, I always, when I'm like actually working, I want to be coming from a very, very calm and peaceful state, you know, like a monk if I can, because I don't want to be getting emotions involved, because that sort of state, that sort of, that sort of emotionally driven addiction in a sense blocks you off from making those sound logical decisions that can make you successful, but you won't allow yourself to get into that state if you force it essentially.
Yeah. So, okay. So we covered the TA, we covered, the whole China news situation. We basically talked about risk management, and I guess the verdict is that you believe that derivatives / futures are not bad for Bitcoin.
I would actually like to explain a little bit more on that. So first, we have to go over the history of like why futures were even brought in to begin with, and basically the first futures that were brought out were like futures for literally like corn, not like Bitcoin, but literally corn, like the that tastes awful and
doesn't digest, and I don't even know why it's still around.
Yeah.
Sorry if anybody out there loves corn.
No offense or anything, but it's a vegetable, so gross. Anyways, so with corn producers, corn farmers, they were having trouble, going from year to year because the price of corn would rise and fall, and they wouldn't be able to kind of like account for their own finances without having some stability in that. Well, that's why futures were made, so that they could lock in a price at a future date and basically account for what they've actually done. And it's the same thing for Bitcoin miners with futures. The miners are allowed to sell, or for example, at around $20,000 price per Bitcoin a couple years ago, the miners could have sold, and it's likely the miners who were selling the futures contracts to lock in that Bitcoin that they were producing at that price for that futures contract. So then they didn't have to deal with the whole 6,000 debacle, down to 3,000
right
year and a half. And of course, the less sophisticated miners, they get washed out because they didn't take advantage of these tools that were available to them. So it actually allows a lot of price stability. In fact, you actually have seen the volatility of Bitcoin go down since futures were brought out. It's just the volatility of Bitcoin is already so astronomical that you don't really notice it all that much.
I do agree with you, by the way, because I remember when I first got in, Bitcoin would have double-digit price swings almost once a week at least.
Yeah.
And now it's like, we get like a 5% and we're like, yeah, all right. Like, it's like, it doesn't feel like it was.
It's also a maturing market as well. As the market matures and as more people get in and as the market cap grows, there's just going to be more people in the order books to kind of chew through. So naturally price will move slower. And you kind of, if you are a true believer in Bitcoin, which I am, the thing with that is that you want that to happen over time as a store of value. You don't want.
Do you think that these guys really do realize the value, and that's why? Because I have a hunch that they know what it is and what it's doing and how it's like anti every fiat ever created. And I really do think that they're trying to accumulate, but that's my opinion. I could be wrong. What do you think?
There's definitely a lot of people in the traditional world who are very interested in Bitcoin, man. They're pretty damn open to it. I can tell you this. I mean, not only from my past and my friends, but one of my good friends is one of the higher ups in a major quant firm in Chicago. I won't name the name. Just he probably doesn't want me to talk. He always says, "Hey, I can't tell you this. I can't tell you that."
Yeah. Don't.
But his firm is heavily involved in cryptocurrencies, and they make markets, and they're doing all the same things, man. And they're a big holder of Bitcoin, and they do believe in Bitcoin, man. So I really don't understand this gang-like mentality mentality between people who are in the crypto scene and like they see like the traditional world as like the evil man.
Yeah. Well, dude, people inside crypto can't even get along. So
oh man,
forget about it.
I've definitely noticed that recently, man.
It's funny though. It's only with the price, all of a sudden the price starts dipping and everyone just starts like chewing each other's necks apart. It's just like, guys, it's man. Just a price.
One of the best things that I've done for my life is stop reading Twitter comments and almost stop reading YouTube comments. Like I still read the YouTube comments because there is a really strong bond between myself and the community, but there's definitely like some people who come in and out and maybe not understand exactly what we're all about.
Yeah.
And it's just like,
actually the community's awesome. Sometimes it's like these other guys in the space, these other influencers, they're the ones that like to stir the pot and create a lot of, put a lot of ideas, it's like, let's say that are just totally fabricated, bro. Like
that's the whole YouTube game, isn't it? Right.
Yeah.
I know a lot of people have kind of been after you recently, and it's just like there's no real reason to be after K-Dub's like one of the most transparent and just like,
dude, I've been literally making the same videos my whole life. Like if you go to 2 years ago, same videos. Like I'm just the same dude, man. I'm just still here. And the longer you're here, what is it like? You either die the hero, live long enough to become the villain. Like guys, I just love Bitcoin. I love cryptocurrency. I love talking about it. That's it. And that's just what I do every single day. And I don't understand cause there's guys out there, man, that are doing all these sponsored videos, which is fine. I have no problem with sponsored content if that's what you want to do. But for me, I just don't want to do that anymore. Like I said, there was just so many altcoins, man. And just look at the performance of them. Like, how could you sit there? You have some people kind of saying like, oh, if you have a Bybit link, you're a terrible individual, right? I don't know, possibly. But here's the other thing. I could have been sitting here for 2 years and just telling you this shit coin, all this development and the partnerships and this, and every week you get paid, you put your money in, you put your money in, you put your money in, and you're just losing and losing and losing. So, I mean, realistically, I understand people's argument, but like, okay, so somebody uses a leverage trading platform, they get liquidated, right? Man, that sucks. You lost all your money in one trade in one day, okay? But which is worse? You lost all your money over the course of 2 years on a slow bleed that you put all your time and focus and attention into, and it turned out to just be a loss anyway. At least, like, if you get liquidated, it's kind of like touching the stove once. That burned. I'm not going to do it again.
Really, man,
I have to edit that out.
It's all about intent, and for me, like, guys in this space who have a bad intent, they're going to reveal themselves over time. If you don't,
most of the people that are accusing other people of being scammers are the ones that did the most shady stuff, not gonna mention
it's projection, right? And that's what I hope to be as well. As I hope to be that person who's saying, hey, I'm not telling you what to do. I'm not telling you how to think, but this is what I'm doing. This is why I'm thinking this. This is, this is, I'm just sharing my experience. That's all. And that's, I think, the best way to go about, being someone on YouTube or anything like that, because you're not trying to influence someone. You're just sharing your experience, which is completely fine. Or or in another sense, just being honest about your intent. If you're having a Bybit link, I don't see anything wrong with that. I mean, you're just saying it's a Bybit. I mean, you're not like, it's one thing to say like, guys, you better take that Bybit link and you better start signing up and signing all your friends up, sign your mother up, and your parents up, and everyone, your dog up. You better sign everyone up, or otherwise I'm going to hate you.
Exactly, Crown. And the thing is, I don't like doing sponsored videos. I just don't, okay? I hate them. They're terrible. They don't really benefit anybody at all, okay? The other thing is, you're not going to become a millionaire or really do that well off of YouTube ads unless you are like a very high up YouTuber and you're
I can confirm
tons of ads playing all the time. So, making a living off of just YouTube revenue is not, it's possible, but it's not the best living, right? So, for me, I've always taken the approach of the affiliate links, and something comes out, for example, Ledger. Like, no one puts a gun to your head and says, use my link for Ledger right now, 30% off. No, it's just like, hey guys, it's there. If you like the content, this helps support the channel. But I would never want
more to that point, man. Like,
it's,
there's nothing wrong with making money, and I'm happy to make money, as long as I'm being honest in my intent, and as long as I'm being, and as long as I have integrity with what I'm doing. I think that's completely fine, man. Yes, I love money. I mean, that's like, who doesn't?
Everybody loves money. Why is everybody here right now? Like, clearly.
Right. And it's, and that's the whole thing with it, man. Like, if you want to support. If you don't, then don't. But as long as you like, the last sound bit I'd like to have is, as long as you are not deliberately misleading someone, there's nothing wrong with that.
Yeah. And honestly, I feel like a lot of people in this space really throw around the term scam. Like, it's like,
kind of lost its meaning, man.
Dude, it's like even altcoins, like some of the altcoins that did lose 90+%, and they're like, oh, it was a scam. no, it was just a failed business venture, like all the other businesses that fail all the time in the real world. But unfortunately, you bought their shitcoin, so it just seems like it's worse. But I mean, how many businesses fail, bro? Most of them in their first 3 years, right? Almost the majority of them.
Yeah.
So, anyway, Eric, end of year prediction. What do you think? Take a guess.
You know what? I actually want to go back to screen share for just 1 second for this, because we can do this mathematically, which I think would be kind of cool.
Yeah, that'd be fun.
Where is? Yeah,
I could use it for my title, end of year prediction, and that way it's not clickbait, because we did do it at the end.
Alrighty, so we can actually look at this mathematically with regards to expected moves, with regards to historical volatility, and we'll just input like how many days until now to the end of year. It's like what, 34 maybe?
Yeah, pretty, right? Something like that. I don't know, something like that.
All right, let's just say 34 days. All right, if it's not, it's around there. I'd imagine. Yeah. Okay, so by end of year, the predicted range would be with a 68%. Sorry, and let me explain this. This green ring that you see right here and right here, that's your first standard deviation. The yellow is your second standard deviation. Your third is your third standard deviation. And
when is this thing going to be publicly available, man?
Oh man, you have to ask the man himself. I don't know, and I don't have control over that. But
okay.
But basically, it's adjusting, and this is not going to be that helpful, to be fair, because the ranges are massive, as you can see. But you can come up with a probability. It's a 68% probability that we end between 6,500 and about 9,500. It's kind of a large range, right? But what's more important, what I think the value in this would say, is that we could also say that it's less than what would it be, like a 32% chance, or sorry, even less than that, about a 16% chance that we end the year above 9,400. Remember, 9,500 is where the weekly trend changes, so that is quite unlikely that we reverse the trend anytime soon. For the same side to the downside, to get to that 5,500 level, which would be my next level if we do negate the 6,900 support thus far. Oh man, this is moving fast. This is beautiful.
We still going up right now?
Then that would be a 16% chance as well. And to end the year above 13,000 or 14,000 essentially, or below 4,500, that's less than a 1% chance to happen. So when we're talking about that long term, it's not happening anytime soon, is what I want to show. And what's most likely is that we probably range between 7 and 9, we'll call it.
Okay, so there you go. You heard it from the man himself. So we're probably going to end somewhere between 7 and 9K. I mean, like I said, we do have a month left, so we will see. I'm sure there's conspiracies about people dumping for tax reasons and whatnot, but we'll save that for the next video. Baby. We'll save that for the next video. So Eric Crown, thank you so much. This was a really cool video. I hope you guys enjoyed it. For everyone out there that's watching, I know this was a little bit different. It was a lot more dialogue, and which is usually it's just charts. I did appreciate it, Eric. Thanks, man.
Yeah, man, I really enjoy this. It's a pleasure to be back. And for all the people who are interested in my channel, I would warn you first off, it's not for everyone. But hey, if you want to join the cave, it's all good.
Yeah.
And as always, man, K-Dub, love to be here, man.
Thank you so much. And for everybody, once again, definitely check out Eric Crown. I will drop the link below. Thank you so much. So once again, thank you so much, Eric Crown, for coming on the channel. I know this video was a little bit longer than usual, but if you did stay to the end, you are a trooper, and I hope that you found some value out of this video. If you did, definitely check out Eric's channel. Feel free to subscribe, turn on the bell notification, drop a comment below. You know the drill, but that is it for me today. Enjoy your weekend. Thank you so much for coming back. I totally forgot to mention the Ledger Nano S. If you're interested, drop a comment on any video, and you are eligible. Thank you so much once again. You guys rock. You're the reason that I do this every single day. My name is K-Dub. This is Crypto Zombie. Until next time, stay crypto and peace out.